Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we'll explore the investment insights of Michael Burry, the visionary founder of Cyan Management. Let's start discovering Burry's unique approach to wealth creation in uncertain times. Burry, renowned for accurately predicting the 2008 housing market crash, is known for his unconventional investment strategy and meticulous research. His willingness to challenge established norms has earned him a reputation as a pioneering investor. In a recent 13F filing by Cyan Management, three standout stocks have emerged, offering potential guidance on how individuals can strategically invest small amounts to potentially prosper in the face of an upcoming market downturn. Now let's dive into the specifics of each of these standout stocks to understand how Burry's investment philosophy may eliminate shifts in market sentiment. Expedia Group Incorporated is our first stock, and it staged an impressive turnaround in 2022, reversing a $270 million loss in 2021 to post a robust $352 million profit. Highly rated by both Wall Street and Seeking Alpha analysts, boasting a strong quantitative score of 4.03 and an A+ rating based on revenue growth and profitability, Expedia is currently seen as undervalued, presenting a compelling opportunity for investors. In 2022, Expedia actively repurchased 5.2 million shares worth approximately $500 million, with a significant $350 million repurchase in Q4 2022. Expedia holds approximately 18 million shares for future repurchases. Recent earnings showed strong signs of growth, with a nearly 20% revenue increase compared to pre-pandemic 2019. The U.S. division experienced exceptional growth in loyalty customers surging over 300%, resulting in nearly 70% more active loyal members. The active app user base also saw a significant 60% rise. Expedia's Adept Management transitioned its brands and geographies onto a unified platform, an ongoing process through 2023. The company anticipates double-digit growth in both revenue and profit for the entire year, driven by a strategic shift towards experiential offerings. In Q2, Expedia achieved an all-time high in active loyalty members, a 15% year-over-year increase in core brands, and a substantial 300 basis point sequential increase in bookings made through apps. Furthermore, the company recorded its highest second quarter revenue, totaling $3.4 billion. Expedia stock is viewed as fundamentally undervalued, offering investors an opportunity to position themselves for a potential breakout. With historic peaks at $120, $140, and nearing $220, it continues to present viable objectives, promising upside potential until new all-time highs are established. Before we continue to our second stock, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and hitting the notification bell to stay updated with our latest content. Now for our second stock, Charter Communications Incorporated. This stock is owned by a leading broadband connectivity and cable operator serving both residential and commercial customers in the United States. As of September 13, 2023, Charter Communications stocks traded at $439.40 on the NASDAQ, with a 52-week range of $297.66 to $452.25 and a market capitalization of $73.71 billion. In terms of valuation, Charter Communications presents an appealing picture with a forward price-to-earnings ratio of 13.64 and an earnings per share estimate of $32.20. The absence of a dividend rate and yield signifies a focus on reinvestment for growth. Analyst sentiment towards Charter Communication is predominantly positive, with a buy rating of 3.5 from sell-side analysts and a slightly higher rating of 3.72 from Wall Street. Various research firms offer mixed assessments, with Sector Research and Hindsight Capital recommending a buy, while Alpha Seif suggests a hold. Financially, Charter Communications demonstrates stability and growth, reporting $54.54 billion in trailing 12-month revenue. It maintains a robust gross profit margin of 44.94% and a healthy EBIT margin of 23.19%, indicating strong profitability. The ownership structure reveals institutional investors holding a significant portion, accounting for 63.98% of outstanding shares alongside notable corporate ownership. Operating in the competitive cable and satellite industry, Charter Communications competes with industry peers such as SiriusXM Holdings, Liberty Broadband Corporation, and Cable One Incorporated. In summary, Charter Communications Incorporated demonstrates a strong presence in the telecommunications sector with positive analyst ratings, robust financial indicators, and a competitive market position. However, investors should remain vigilant for industry dynamics and potential regulatory changes that may impact the company's performance. Now, for the last stock, here are the key points to know about Generac Holdings Incorporated. 1. Fueling the future. Generac is at the forefront of energy technology, empowering homes and businesses with reliable power solutions. Number 2. Seizing growth opportunities. Positioned to thrive in today's changing energy landscape, Generac capitalizes on trends like renewable energy adoption, grid reliability, and the need for cleaner power sources. Number 3. Overcoming challenges. While navigating challenges in recent years, Generac's resilience shines through with strong growth in commercial and industrial sectors, promising brighter days ahead. Number 4. Optimistic outlook. Generac's positive trajectory in 2024 and 2025, with expected earnings and cash flow growth, adds to the optimism surrounding this investment opportunity. Number 5. Unlocking potential. Despite short-term hurdles, Generac stocks is a potential treasure waiting to be uncovered. Its long-term growth story is sure to captivate investors looking for opportunities in an evolving energy landscape. In conclusion, in Michael Burry's recent 13F filing, his choice of Expedia Group, Charter Communications, and Generac Holdings Incorporated showcases his unique investment approach. These carefully selected stocks reflect his ability to spot diverse and promising market trends. This filing not only reveals his picks, but also offers insights into Zion Management's evolving investment strategy, providing investors with exciting growth opportunities and a glimpse into the firm's forward-thinking outlook. Well, that's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.